Hello, welcome to our view from the IDB. I'm joined by Daniel Zelikow, the co-head for infrastructure, finance and advisory at JP Morgan, and Daniel also our vice chair for public sector. So you have quite a big role at JP Morgan. Yeah, I'm sure you're very busy. But let's talk about infrastructure. There is obviously a big need in Latin America, and the region presents a variety of risks to banks looking at financing these projects. What's your take? What would you like the governments here to do to reduce these risks?
Thank you, Celia. We see Latin America as a place of great opportunity for infrastructure development and infrastructure finance. And depending on the particular kind of infrastructure provision that's at stake, will drive what's the relevant approach to it. But I would say in general, countries in Latin America have been increasingly willing to adopt PPP frameworks, where they're in effect financing infrastructure in part through the private sector by establishing concessions with some public support. Now, countries where the PPP framework is very well developed, the governments are able to pull back on some of that support and still attract private finance. But others, such as, for example, in Paraguay, where we are today, the government is willing to extend significant benefits for both the equity and the debt investors in an infrastructure project. So where do investment banks, or JP Morgan in particular, come into this? First, it's important that we regard infrastructure not just as something to finance, but also we do a lot of structuring. We find the right home among our very large investor base for the type of risk that's relevant to them.
How have you seen this space changing over the years? Finance and infrastructure means often putting down a long-term commitment, and after obviously financial crisis, we all know that not all banks were prepared to do so. So have you seen a change of scenery?
Well, it's a great question, and one of the reasons why JP Morgan decided to create an infrastructure finance and advisory team is that we think that the business of infrastructure finance is changing fundamentally. So first, project financing banks, which had typically put the risks on their balance sheets for many years, are starting to pull back a bit. Second, institutional investors are getting very interested in infrastructure-related assets as being an excellent match for the kinds of liabilities that they also hold. So a firm like ours, we feel, is very well positioned with the breadth of products that we have, with the global footprint, to structure an asset on behalf of a sponsor so that it can get financed, and then to unpack the different risks and put those with the investors that are best suited to bear them. This may involve JP Morgan itself putting its balance sheet to work, but sometimes it doesn't. So what's really relevant, and I would say that this is as a general case, it's not just JP Morgan. Investment banks, I think, are becoming increasingly relevant to the infrastructure space because of their skills in matching investors with kind of sponsors' needs.
Okay, so perhaps we're seeing a resurgence, as you're saying, in terms of interest from these big financial institutions, both in terms of obviously lending to these projects, but also in terms of structuring new deals, which is the new thing that is definitely
structuring, distribution, and for example, one of the things that kind of we're particularly strong at is coming up with the right hedging mechanism, because most infrastructure projects involve some exposure to interest rates, to foreign exchange risks, to sometimes commodity risks. And so a bank like us is able to come up with the right long-term hedge that makes the deal financeable.
Okay. I also want to ask you about your experience at the IDB. So we obviously hear from this year's annual meeting, but you used to be the CEO of the Inter-American Development Bank. So you've seen the bank's attitude towards obviously development in the region, but also infrastructure. So what is the role, do you think, of these kind of institutions in helping the regional development of these connections?
Well, infrastructure has always been an important part of what the IDB does. And The IDB has two allied institutions. As you may know, they've recently spun out the private sector activities into the Inter-American Investment Corporation. So now they have a capability of approaching infrastructure risk across the entire credit spectrum. So for those projects that involve risks that are fundamentally sovereign, for example, land acquisition for an urban transportation system, they're able to provide a sovereign guarantee through the IDB bank. For those risks which are fundamentally private, let's say a sponsor who's going to construct or operate infrastructure for, as part of a concession, it's got the IIC to support that. So they're in a very good position now to approach the problem of financing infrastructure with the right instrument. One other thing that they've done, which has been enormously successful, and I think they haven't gotten sufficient credit for, is that they've done, just this past year, a merger of the concessional loan window into the ordinary capital of the IDB, which has given them another $5-6 billion of additional capital, which they can then lever up and have a much greater financial impact in the region than would otherwise have been possible.
Very good. So interesting developments and lots of work still to be done. Thank you for your comments.
You're very welcome. Thank you.